If we then have a look at the costings for lenses, again, nothing specific about the particular lenses that are being costed up or the exact items that are included in here. But as soon as they start talking about costings, I instantly start thinking about contribution, and what you've got directly missing from this is the selling price. So don't be surprised if in one of the variants there was some sort of contribution analysis. You need to bring the selling price in, leave out the overheads, assuming that they are fixed overheads, to work out the contribution per unit for each one. To give you an obvious question about which item should you focus on if you've only got limited skilled labour, etc. And irrespective of which one is more profitable, if you've only got so much time to do something and one takes longer than the other one to do, and we can see here that the cost of labour for the FZ480 is higher than the Z220, implying that it probably does have more labour hours, despite the fact it makes you more money, it might not make as much per labour hour. The manufacturing of the camera bodies over the page, again, nothing majorly significant other than the fact that it does have electronic components that are built into this that have to be bought in from other suppliers, which relates to a dependency on them. But again, there's nothing specific that stands out from here that leads to a direct question that I think you'd have to be concerned about in advance. However, over the page, as mentioned previously on the previous video, they do have various distribution channels, looking at the branded shops, the third-party retailers, how much money comes from each one. There's an obvious performance evaluation type question. How do you monitor the performance of each? What targets do you set? Is it going to be a different sort of target for each one? The training of these shops and the third-party retailers could easily lend itself to a learning curve style question about every time you train these, because there are a lot of distribution bodies here. And if you keep training them, every time you do it, it's going to get quicker and quicker and quicker. It also lends itself to an explanation of segmental reporting. A standards question that explains how you would have to show the income and the profits from each segment separately within your financial statements. Over the page, with regards to the breaking down of the structure underneath the sales director, you can clearly see here that each one is essentially very, very similar. Regional sales, professional and premium, budget, compact, and you've got the same for each one of these. So there's nothing that stands out that you particularly need to be aware of. The fact that it's all the same could easily lend itself to a question about changes in structure. Right. What if you wanted to set them up as a profit centre, or you wanted to change it to a cost centre, or you wanted to have it as an investment centre? What's going to be the implication of each one? Over the page, with regards to the group strategy and the structure, I would always be conscious that I want to learn who is who. Again, not from the point of view that you are expected to quote these people, but if they make reference to somebody like Elaine, I need you to know that they are the HR director with having to go back and look at it. If you want to make a recommendation that somebody needs to do something, if it's to do with sales, you want to be able to quote very quickly, that needs to be Hans, as opposed to you having to go back and look at the case study and figure out, what is the right person for that. There's no real need to go through and specifically identify the background for each one, because it's been given to you. This is not, can you remember all of these things specifically? But have a think about whether you think they do have a good level of corporate governance. It seems that we only have 3 non-executive directors. That's probably not sufficient given the amount of executive directors that you have already. So have a think about increasing the number of executive directors to match the number of execs that you've got, and then think about whether you've got the right amount of skills for each one to match against the executives. With regards to over the page, the revenue sources and the profit sources, again, Don't waste your time going through learning or thinking about where all the money is actually coming from, because again, they won't test you on this. And it's very similar to what we talked about before. It might lend itself to a question on why do we have to report on these areas separately, but there's nothing specific about where the money is coming from, the profit from each particular product. With regards to the competition over the page, just make sure again you know who is who, just so if they make a reference to them, you're not thinking, who is Jola? Yeah. But again, if you want to refer to the competition, make sure you know them off the top of your head so you can give an example, but you're not expected to recite any of these things. The fact that they give you extract from the management accounts and they show you that there are differences between actuals and budgets, it might lend itself to a question regarding standards. So how do you come up with these budgeted figures? What do you do about setting standards when you have a changing environment? Should you go down the route of planning and operational variances? And just a general question about what sort of variances you have, what do they actually mean? Now, I wouldn't be surprised in one of the variants if they actually do go through and give you a bigger breakdown of the variances here, and you would just have to explain to a senior manager what it actually means and what could have caused all the different variances that you've actually been given to you. Remember, there are no calculations, so you will not have to go through and do the numbers yourself. When I come through to look at the financial statements though, again, there's nothing that stands out significantly. Revenue has gone down a little bit. Cost of sales has also gone down, pretty much in line with this. Your selling and general and admin expenses seems to have gone down a little bit quicker than your revenue and cost of sales, which could imply that you've been more efficient, but nothing major. But that is what has lent to this increase in your operating income. Your interest has gone up, but that looks as if it's due to the fact that we have taken on more debt. Nothing significant about tax. Property, plant and equipment has gone down, but that could simply be because of the depreciation charges. Goodwill has increased, and that implies that there has been an acquisition at some point because you couldn't capitalise your goodwill otherwise. Increase in inventories, a little bit strange when your sales are going down. It could be the fact that you've not sold what you expected, which makes you think about, do you have stock that is going out of date, is going to become obsolete? Trade receivables essentially going down in line with your sales. Bank's gone down a little bit, but no massive movement here. Share capital and share premium has stayed the same, so no share issue. Retained earnings have gone up a little bit, not as much as your profit for the year, which implies that you have actually paid dividends during this period. Trade payables have gone up. Your cost of sales have actually gone down, but your trade payables have gone up. Why is this? But again, I can't imagine a major question on here. We're not talking about a massive change here. Tax has gone up, but that's just your liability for the following. You've then got your segmental information, and again, nothing significant about this, but you might be asked to explain why you have to do this, and is there anything that needs to change. You've then got your competitors' results. You're not going to have to give any information about the competitor. You work for Montel, and therefore your focus is going to be on your business. There could just be something that says, why do they have more revenue than we do? And you might want to talk about what you need to do to increase your sales, or talk through the pros and cons of a particular plan that someone's put forward. But they never have questions that talk you through the competitors' figures. And then with regards to the press coverage items at the end, this is just designed to give you an insight into what is happening in the industry. Read them, be aware of them. But again, don't expect to have any questions based on it directly where you have to recap this and talk about what has happened. It's much more like they are to tell you, as you have read in the press coverage, we are now thinking about what we're going to do to take on the fact that mobile phones are taking our business. And you've got a couple of these articles to read through. So overall, although we've gone through that relatively quickly, there isn't usually anything in the pre-scene that you are going to have to draw from specifically to answer your questions. Be aware of it. Make sure you understand how this industry works. We're all familiar with what cameras are. We're all familiar with what mobile phones are and how they're eating into that market. And if you do go back and look at the past exams and look at the questions that they've set, the information they give you on the day of the exam has very little specifically to do with the pre-scene information. And most of those questions you could actually answer without having detailed knowledge of that pre-scene. It is going to make you more comfortable in the exam if you're aware of the terminology, like say who is who, etc. But don't spend too much time going through and learning anything from this specifically. Just make sure that you are comfortable with the fact that it is a manufacturing company essentially, and it's selling high-tech products that change on a rapid basis.